Welcome you all to yet another very interesting video. I'm Sundar from Canary Capital Solutions. Last week we saw a video on question and answers. After the video was published, there were many people who actually called me and appreciated, and they also had a lot of queries on the term insurance part. Hope it added value to you. So today what we are going to see is also something very interesting. It is the talk of the town. Why is the market going up? What is happening to the economy? So in this video we are going to see a lot of economic data which will tell you where we are heading. So the first chart what I am showing you here is the Nifty chart. So if you look at our Nifty before the COVID, that is Jan-Feb, it was at about 12,000 points, and after the numbers for COVID started increasing, the market actually started panicking and it saw a very huge sell off close to about 30%. And by the middle of April or so, it actually bottomed out, and from there it's been on the rise, and today as we speak we have actually surpassed even the February highs. So this is what we normally say as a V-shaped kind of a recovery, but today we can say it easily because the data is in front of us. But when it was actually falling, nobody would have even expected the rise would be so fast and so quick. So the current update on the corona numbers, I have shown you two charts here. The first chart, which clearly tells you that the percentage of testing positive actually has started dropping. That's a very good sign. And the second chart clearly tells you that the recovery chart. So as we speak, the recovery is more than 95% in India, and also the death rate has been one of the lowest across the world, and it is still falling. So these two have actually put in a lot of good news to all of us. And the next good news which is there is the vaccine. So 3-4 months before, we never knew that whether the vaccines will come and by when it will come. I think the answers are out now. As we speak, UK and Russia have already started vaccinating their citizens, and we are also not very far away. Already our Prime Minister has hinted that in the next couple of weeks our vaccine also should be out, and we will be getting into a vaccination mode for all our citizens. Though the active cases and the recovery rate started increasing just in the last 2 months, the markets actually started recovering by the middle of April. Why is it so? The next chart clearly indicates the liquidity which was available in the global markets. The chart is actually of the Federal Reserve of US, where they've actually pumped in about $3 trillion in the market over the last 3-4 months, which is a substantial kind of money to bail out this market. That is one of the reasons the equity markets across the globe actually started rallying, and India was also one of the beneficiaries of this excess liquidity in the market. As a lot of measures happened across the globe, even India had announced various stimulus packages at different points of time. And the data what I am showing you here is the GDP numbers for quarter on quarter for various countries. If you look at, almost every country had a very deep fall in the first quarter of this financial year, and the second quarter has been much better. So if you look at India as the number, the first quarter of this financial year, we saw a minus 24% contraction in the GDP, which is like one of the historic thing across the globe and even for India. The second quarter also was expected to be reasonably bad, but as the economic recovery started happening, the numbers what came for the second quarter was much better than what was anticipated. So the second quarter contraction is just about minus 7% or so, and still we have a long way to go, but the recovery seems to be much faster. So in the coming slides I am going to show you where the recovery is happening. The next chart is a very crowded chart with so many data points covering every macro data point available, right from inflation numbers to the trade, the foreign trade, the banking, the industry and other things. But I'll just give you a simple thing. If you look at the period between April to about June, July, we can actually see a lot of red shades in the macro data. But as we start entering September, October, November, the number of red shades are on the decline and the number of green and the blue shades are on the rise, which clearly says that the recovery is actually broad-based across industries and across sectors, which is a very welcome sign. The next chart what you are seeing is again related to what has happened to the overall economy. This is the Nomura Business Resumption Index. So if you look at during the peak of the lockdown, say April, May, June, July, the activity levels in India actually fell almost to 44%. So from about 100, it fell to about 44. And from then, we have actually seen a gradual increase almost every month. And now we are almost close to the 90% resumption index. So which is again repeating what the previous chart told, that the overall economy is actually recovering much faster than what we anticipated. As the economy started recovering, we also saw a lot of companies actually coming back to profitability in a very good way. So the data what I am showing you here is the Sensex and Nifty companies' profitability. After the deep fall in profitability, almost every company in Sensex and Nifty has actually again come back to its profitability, and with the way in which it is recovering, it looks like the profitability can actually increase. Another important factor why the stock prices have been going up is we saw that there is excess liquidity in the global markets, and eventually it started chasing the growth markets like the emerging markets. And India in the last 12 months have actually got about $17 billion, which is a substantial amount of money which is coming to the emerging markets. And if you see the chart what I have shown you, India has been one of the biggest markets where it actually collected a lot of foreign money in the last 12 months. Also, another very important thing which has happened is most of the central bank across the world have been cutting interest rates. What it means to business is nothing but the cost of money is coming down. That means the EMI what I was paying for the loan which I had borrowed has actually come down, and for whatever new money I am raising, the rates are much lesser. So in India, almost the interest rates have fallen by more than 2.5 to 3%, which is a substantial saving for the companies. And then, because of the pandemic, we all become even more efficient in terms of cutting costs. Wherever they could use their efficiency to the fullest, each company worked on it. The real estate costs started coming down. So many companies started consolidating their businesses across different places into a single place, or trying to reduce the number of branches and things like that. And a lot of cost in terms of the logistics to employees and the other costs associated to the employees. All these things started coming down, and because of that, in spite of sales not going up, the company started making profits. Another important trend which is playing out is lot of unorganized business which is not being very efficient are actually struggling to stay afloat in the business. Because of that, many weak hands are actually going out of the market, and because of that, the number of competition is actually reducing. So the companies which have been staying afloat and who've been very efficient are actually making a lot more sales than what they used to do. Another interesting trend which is happening is a lot of unorganized players are vanishing because they are not able to raise fresh capital, whereas the organized players are actually able to raise fresh capital because a lot of fiscal measures have been announced by the government, which is actually helping the organized players more. Because of that, the organized players' pie is actually increasing. All put together, the companies have become a lot more efficient and a lot more profitable. And because of that, the companies' stock prices are going up. Add on to that is the liquidity and the interest rate cut. So all this put together, we are seeing a surge in the prices. So now let's concentrate on the valuation of the market. Of course, we have seen so many good points and how the economy is recovering. But let's also understand, is the valuation supporting this growth? So the next chart what I am going to show you is the trailing PE and the trailing price to book of the Nifty companies. If you look at the chart, it clearly shows that both your price to earnings and price to book are actually above the average, which clearly indicates that the markets are definitely stretched at a valuation level. The next data point which I am going to show you is the market cap to GDP. If you look at the market cap to GDP today is almost at about 91%, which is actually way above the average of about 75%. So these indicators clearly shows that the market is definitely not cheap. Definitely the valuations are overstretched. This does not mean that the market can actually fall or correct. Only time will say, because if the economy is looking at a turnaround, naturally the market will only extrapolate the earnings and keep moving. And currently the liquidity is also chasing. So we need to really watch these data points more closely to really understand whether the rally will continue or not. So we have seen various data points on the economy and also on the valuation. So I will just summarize for you on what all we saw. The risk on COVID is definitely decreasing. So that's a very positive point. The economic indicators are definitely up. The companies have become a lot more efficient. They are on the cost control and they are also getting a lot of new business because of business moving from unorganized to organized. The market valuation is definitely stretched compared to the averages. So as an investor today, if I am overweight equity, maybe it is reasonably a good time to trim some part of it. And if you want to invest fresh money, maybe you should have a slightly longer period of time and also invest staggered over a period of time. Hope you found this information useful to you. Please do subscribe to our YouTube channel. Please do not forget to click the notification button. So the next video what we are going to see is on the New Year resolution, what you should take as we welcome the year 2021. Thanks for watching.